Okay, I think we are live. Okay, everybody's got their coffee. Everybody's feeling good. We're close up on the faces. All right, here we go. So thanks so much for joining us, folks. I'm very excited to have a live stream today with some folks who are really going to give us some great information about equity crowdfunding, an important new resource that we want to make sure folks know about when it comes to providing capital for typically under-resourced businesses, mostly from Black, Brown, and women entrepreneurs. So we've got Heather Buffo and Cheryl Campos from Republic, which is probably the premier, and they did not pay me to say that, retail investing platform, which is an equity crowdfunding, does equity crowdfunding. So we want to use them as a resource today to make sure that we get smarter, because any day we get smarter is a good day. So Heather, Cheryl, thank you guys so much. I appreciate you joining us.
Thanks for having us.
Thank you.
Yeah, absolutely. So while we've got you here, let me ask you questions. What is equity crowdfunding?
Who wants to go first? I can take it. So equity crowdfunding is a special type of fundraising that was enabled by the SEC in 2016. So prior to 2016, in order to invest in a private business, you had to be an accredited investor. That meant you had to have a net worth of over $1 million or an annual income of over $200,000 for more than 2 years, or $300,000 for a couple. That's a lot of money.
Yeah, right.
Yeah, that's a lot of money, and not a lot of people fit that description. So in 2016, under the Jobs Act, Title III was passed, which enabled equity crowdfunding, which allows companies to raise funds from both accredited and non-accredited investors. So Republic is a registered online portal that enables companies to use that exemption from the SEC.
Okay, great. And so the word portal, I want to make sure people, one of the things that I think we found out when we talk about equity crowdfunding is there's a lot of jargon. So what is a portal and why is it useful? And you guys are a portal. Why are you useful?
Yeah, I'll take this one. So I'd say we're actually like a website. If you really want to go on, it's a platform where we host all of these startups, over 100 actually of your choosing, and not just startups. Actually, it can be real estate, video games, small and mid-sized businesses, and so there's different types of offerings, not just in terms of buying, piece of equity, but also, debt, revenue share, to really cater to different types of investors out there who might want a blend of not just the riskiest investment of equity, but might also want, some dividends over time. So it is a website, and it is also an app now. So you can, invest in a startup through Apple Pay, which is pretty exciting. Too easy, to be honest, but we really want to make it accessible. And that, at the end of the day, is something that democratization of this type of asset class is key. And that's why we do it on both, desktop and mobile.
Yeah, that's great. And we're definitely going to get more into that democratization, because I think that's such a critical part of this, and sort of the ease from I want to invest to I can invest. You guys are a big part of making that possible. Let's talk a little bit more about kind of the background details of equity crowdfunding specifically. There was a recent change in March. Can you talk about maybe what the limits were before, what they are now, and kind of where things stand overall with the standards?
Yes, so there were a lot of things that changed in March, which was really exciting. So between 2016 and March 15th of this year, the exemption that we take advantage of, regulation crowdfunding, as well as some others under the SEC, were highly, highly regulated. They still are, but there were a lot of restrictions, and the goal being to kind of ease us into this new capability and make sure that we're still protecting investors while creating more opportunities to support businesses and create jobs. So prior to March 15th, you could only raise up to $1,070,000 in any 12-month period using this exemption. Now you can raise up to $5 million, which is amazing. So now we're able to support companies that are at, slightly later stages and are still interested in engaging their customers, their users, their audience, to have a stake in their business. Some other things that came into effect in March include testing the waters. So this is kind of just jargon, but essentially what it means is, before, if you were going to launch an equity crowdfunding campaign, you couldn't tell anybody that you were doing it until the campaign was pretty much launched. And then you kind of just had to cross your fingers that your marketing was strong enough and your audience was engaged enough to show up and invest in your campaign. Now, companies are allowed to solicit ahead of time interest in such a campaign and say, hey, we're thinking about doing a campaign with Republic. This is our goal. Would you be interested? How much would you be interested in committing? So that capability we're really excited about because it really gives the chance, particularly for underrepresented founders who might not have as strong of a network, to gain that interest ahead of time and kind of shop around the idea before going through the time and cost it takes to launch a campaign. Those are a couple of things that I'm excited about. Cheryl, are there any other ones that you want to highlight?
No, you covered all of the major ones that I think will really, support underrepresented founders. They're testing the waters. Will really support, some of these larger raises that we have, right? Series B and C coming up. That because of the 5 million makes it just more appealing because it's the same amount of effort for more money, and that's why we can now serve as pre-seed all the way through Series B and C. So like the brands that people know about and care about, you as a customer can now just even come to them and say, hey, I want to invest in you. Like, let's go make it happen at Republic.
Mm-hmm. Yeah, and that testing the waters, I think, is such an important one too for why you guys are talking about it. So it puts the emphasis on, initially the SEC kind of says you can't talk about it until you're ready to go, but the testing the waters puts the emphasis on the first part before you ever kind of jump in, which I think gives people a huge advantage because you don't have to spend all that money like you talked about, Heather, to sort of push a marketing campaign. Now, when it comes to, Cheryl, what you were talking about, Series A, Series B, Series C, pre-seed, seed, can you talk a little bit, just do a little bit of overview of, let's say I'm raising money and I have a company that's going to sell, coffee cups that look exactly like this. I want to raise initially, it's just an idea in my head. Can you walk people through what pre-seed is, what seed is, just quickly, so they have an idea of, what some of the typical numbers might be when you're raising money?
Yeah, so I'd say if you are at the very, beginning stage, I mean, pre-seed encompasses idea stage, MVP stage, so MVP, minimum viable product, determining product market fit. So it's generally pre-product, pre-revenue. That is, it's something that a lot of people actually use rewards crowdfunding, so like Kickstarter or Indiegogo, to actually validate, because that's a way of understanding customer appetite. And if they back it, that means that there's something there, right? So that's I would say one. I think also just keeping in mind, like, pre-seed for one investor might be completely different from pre-seed and their investor. Sometimes people also say pre-seed is post-product, post-revenue, right? It's just a matter of the fact that the company hasn't really even been around that long, right? And so sometimes people gauge it by where you are in terms of the product. Sometimes it's more around the timing. And then I'd say seed is when I believe there's more product market fit. And also there is a time where you are starting to really look for customers. And I would say a seed stage now is more around, raising like 1 million to 3 million to 5 million, 7. I was just actually reading an article about how, these valuations of companies have gone significantly up because, and they're raising even more because of that. And so, I think all of these things are just more of like kind of, ballparks, but it's not an exact science right now. Like, everything just seems to be shifting since capital is just so flush that, investors are trying to invest in anything, even at the higher valuations, just so that they can get or capture more of that alpha. So pre-seed, that's pre-seed and seed. I'd say Series A on is when you do have, like, people used to say, like, you reached 1 million in ARR, right? So annualized recurring revenue. Mm-hmm. And so the thing there is more, okay, you've gotten product market fit, you've made all this revenue. Now how do we get you to scale? And so, Series B, C is just different types of other growth stages, but that's when it just becomes more of a mature company, has a lot of employees, or maybe not actually. There are some companies who just, like have 15 employees and call it a day, right? So it really just depends on the business model. But overall, the way that Republic sees it is that we generally look for more post-product post-revenue, so we don't have as many pre-seed companies. We focus more on seed and Series A. And then at the same time, if they are a pre-seed company, we want to make sure that they, you know, at least have some product market fit, or that you know, they might be backed by a notable VC, or that they have a notable founder that has exited before. So, or even just a large community that might want to come in and invest in them. So those are the types of things that we're looking for if someone's more at the pre-seed or seed level.
That's great. Yeah, that helps a lot. Give people a sense of where the life cycle of their business and what they should be looking for. Now, you said a word that I think a lot of people, or a phrase that a lot of people will be maybe slightly confused about when it comes to equity crowdfunding: rewards crowdfunding. So what is the difference between rewards crowdfunding and equity crowdfunding? Obviously, the word equity is going to play in here. So whichever one of you wants to take that, that'd be great.
Sure, I can do that. So it's an excellent question. A lot of people are confused about the difference between rewards and equity crowdfunding. So rewards-based crowdfunding is one where you are gathering money from the crowd, and what they get in return is some sort of reward or perk. So I invest in your company, and in exchange, I get a T-shirt or a pre-sale of your product, or some other kind of tangible perk. But then the relationship stops there. I send you my money, you send me something back, and then we're kind of done with each other, unless we want to continue to engage. With equity crowdfunding,
it's almost like you went to the store, you bought the T-shirt, you got the T-shirt, you're done.
Yep, exactly. And then in equity crowdfunding, you're actually selling a stake of your business. So there's an ownership exchange. So on Republic, the primary instrument that our issuers use when they are running a campaign is the crowd safe. So it's modeled off of the Y Combinator safe. A safe is a simple agreement for future equity. So it means that you're investing in the business so that at a later date, when there's a conversion event, so if the company is acquired or it IPOs, your equity will then convert into some type of equity share. Usually common stock, could be something else. And you're basically purchasing it at a discount at an earlier round. So it's early stage investing. You're actually invested in the business and in that company's long-term success. And the reward that you get in exchange is that ownership later down the line.
Yeah, critical. Thank you for that, because I think, and one of the things that people will, it took me a while to figure out too, even with my law degree, right? This is back when I was learning the difference between when a sale is done and your relationship with the person who made the sale versus the equity. The equity is a much longer term relationship, right?
Yeah. And the nice thing about equity crowdfunding as well is that you can incorporate rewards into it. So if you go to republic.co right now and select any current campaign, you'll might see on the side of their campaign page that they'll have perks such as, if you invest $500, you'll receive a pre-order of the product. Or if you invest $1,000, you'll get a special meeting with the founder. So whatever companies want to incorporate in order to incentivize investment, they can also do that with equity crowdfunding. However, with rewards crowdfunding, you cannot offer equity.
Got it. Yeah, and that's basically, that's very, very helpful. So in terms of, there's a good and a bad side to, or I shouldn't say a bad, there's an up and a down to the longer term relationship, right? When it comes to equity. So like with rewards, I know exactly what I'm going to get when I make that investment. I give my $50, I get the T-shirt, I'm done. With equity, I could get a T-shirt, a meeting with the founder, and equity, but there's a plus and a minus to that. There's a future that's somewhat unknown. Can you guys talk a little bit about that?
Yeah, so I can take that, Heather. So in terms of seeing a return, right? Because I feel like a lot of people talk to us and they're like, okay, so I invested, when do I get it? Is it in the next year, 2 years? And I'm like, oof, like, first of all, what's it called? We need to kind of manage expectations, right? And the key thing is that the time horizon for startups to start exiting is like from 7 to 10 years, sometimes even longer, right? And this is, once again, an asset class where not many people are familiar with it because 93% of people couldn't even access it, right, until 2016, right? So that is something where it's part of your portfolio, but it should not be your whole portfolio. And not only that, it is something where if you do get returns, you get them in 7 to 10 years. And so what you are really is like financially aligned with the company until that liquidity event, right? Until the IPO get acquired or there's a change of control. And so I think at the end of the day, it's really about being there for them, supporting them, being a customer, being, a networker, and really kind of trying to connect the dots as much as possible. We have something called social crowd, which essentially when you do invest in a company, you can also say what your superpower is. So like, hey, like, I can do your taxes for free, or I am a retired lawyer, right? Or I can, I can make these customer introductions. And so it really is that network effect of having so many investors in your, now in your company that are mission aligned and financially aligned. And so it's something where you don't get a mug, but in the future, not only have you been, you're able to get a return if they do end up getting acquired and then, it's positive, but you also have a stake and kind of have a part in their success, right? So you've helped build a company, which I think is just an incredible opportunity, and not just the company that you can, that you work at or whatever, but you can do it for many different companies and diversify your portfolio like that.
Yeah, that's big. The diversity of the portfolio is huge, and so all your money should not be put into my coffee cup company. That's that equity crowd fund should not be your only investment. But if this goes crazy and, we sell 1 billion of them, not only will you get, the free mug that comes with the investment, you also share in the upside, which is big. So there's always a risk with any investment, of course. So the diversification is critical there. So Cheryl, you did it again. You said another term that I need to now jump off of. You said asset class. Okay, so talk to me a little bit about different kinds of, so raising money is big when it comes to, whatever kind of company people have, they want to find ways to raise money. There's friends and family rounds, there's grants, there's loans, there's venture capital. Can you talk a little bit about, there's others too, I'm just sort of generalizing. Can you talk a little bit about where you guys feel equity crowdfunding or sort of the retail platform that, Republic provides falls within those?
Sorry, are you asking about within fundraising rounds or within asset classes?
Within asset classes, like what kinds of businesses would go for venture capital versus maybe equity crowdfunding, and maybe all multiple kinds? Where do they cross over? Where are they?
Oh, I see. Yeah, sure. So the great thing about equity crowdfunding is that it can be used in tandem with other types of capital. So it is one of many tools in a founder's toolbox for fundraising for their company. So at Republic, we are industry agnostic. We are able to support companies anywhere in any industry as long as they are incorporated in the United States and they have some runway. Those are the bare minimum, non-negotiable, you must-haves, and then everything else we kind of flexibly review. So typically our companies are in their seed stage. They may or may not be raising venture capital. A lot of our companies are raising venture capital before, during, or after their Republic campaign. And they're able to do that because using an equity crowdfunding campaign is a very flexible type of asset. So when you start a campaign, you can collect investments, and typically campaigns last about 90 days. You can wait until the end to collect all your investments, or you can do a rolling close where you're able to extract some money from the campaign throughout. And you can set your target wherever you want. So you can raise up to $5 million, but you can, decide maybe you'd be happy with $500,000, $1 million, or you can go, whole hog for the 5 million. If you're raising other capital while you're raising a Republic campaign, you can close your campaign early if you close capital that you were working on during the campaign, or if you don't end up closing the amount that you wanted, you can keep your campaign open a little bit longer and try to reach your goal. So it's extremely flexible. Most of our companies are at the seed stage when they are raising on Republic. However, like we talked about, the pre-seed to Series B, C, they're a little bit arbitrary depending on what industry you're in and what your product looks like. So we're able to support companies across all of those stages depending on the engagement level of their community and their ability to bring some sort of energy into the campaign. So if you are a business that is looking to raise equity capital, you can do that through Republic. We also, I think, we might have mentioned before, we support other verticals as well. So we have a real estate vertical, cryptocurrency, small and medium businesses, as well as video games and e-gaming. So there are lots of different, expertise that we have internally to support companies within these different industries as well.
Gotcha. I would love to have a separate conversation about cryptocurrencies, because I bet you're having some interesting meetings about that right now.
Yeah. Cheryl and I are not the crypto experts, but we are crypto enthusiasts, and we are learning alongside a lot of other people. So we love talking about it.
I was explaining to my father-in-law the other day what, because he was asking me, it's like, I'm hearing a lot about Bitcoin. Should I buy it? I was like, wait, first of all, hold on. Let's talk about what the blockchain is. Let's talk about, because there's so much. Well, that's a whole other conversation, but very, very interesting. And the blockchain is going to last forever. I think it's going to be great. It'll be interesting to see what the coins do, though. Okay, another piece of jargon that we have to talk about when it comes to raising money. Heather, you're exactly right. I love the flexibility of equity crowdfunding. And I love that it can be run in tandem with other things as well, because that, again, it just gives people options. Valuation. So when I'm raising money, if I'm, I've got my coffee cup company, and I want to raise money for it. If I'm going to raise $5 million, I'm going to have to give away a portion of my company if I do equity crowdfunding, right? That's what the equity piece means for me as the person who runs the company. How do I decide, and how do you guys as a retail platform decide when sort of we've hit the right value? Well, what is a valuation, first of all, actually, because some people may need to know that. When do we also, kind of make the decision on the $5 million we raise versus the valuation of the company and how much we want to give away? How do you make those choices, and how do you guys make those decisions? I guess we'll ask you specifically at Republic.
Yeah. So this is a great question, because I feel like sometimes people say, oh, a company can just set their own terms and put themselves on Republic, and that's what it is, right? Yeah. Which is not the case. So we take into account the funding history of the company. We see the metrics that they have. So we collect their, 3-statement financials and their cap table, and really take a look. And if actually most of the companies that are raising on Republic are also raising concurrently from venture capitalists. So that means that whatever terms they're stating for the venture capitalists, they should mirror them for the retail investors. That's something that is important for us, because we don't want the retail investors to get the short end of the stick. Now, and that also leads to the whole trust factor, right? As you mentioned in the beginning, which we didn't pay for you to say, but Republic basically is the gold standard for all things. And that really does mean gaining the trust of folks that, we're vetting all of these companies, right? 3% of companies that apply actually end up launching on the platform, right? Because we are very stringent in our standards, and we want to make sure that there are times where companies did not list on Republic because we did not accept their terms. We thought maybe that might be too egregious, or, this is something that just doesn't make financial sense for the investor. And so it's really about keeping investors protected and in mind, and recognizing that we have a fiduciary duty as well to make sure that everything is sound and key. So that being said, if they already raised the round at a certain valuation and then they want to increase it, we just have to kind of corroborate it through, whether they, had more marketing or they got more customers, or there's a justification for that increase. And so, but at the end of the day, it's also all there, right? All companies fill out what's called the Form C with the SEC, which is a high level look at the business and financials. And so retail investors can go and actually take a look and make sure that, are they comfortable with the terms set by the company, and then they can go and invest.
So essentially, the way that those terms are set is based off of the valuation, which is just how much is your company worth. And that's calculated in a lot of different ways, but it is a proxy for, what are your actual assets and revenue, and then, what is the potential projected worth of the company based on its growth. And so because that calculation is something that can be, it's a little bit of, science, a little bit of magic. And so people can arrive at different valuations at different times. And so investors and companies have to agree on what is the proper valuation for a company at any given point in time, because that total value is what's going to determine ownership. So how much of that value, if my company is worth $10 million, Cheryl might own $2 million, I might own $5 million, and then Adam might own the rest. And we have to determine the percentage of ownership of who we're going to invite to invest in the company based on what is the total value and worth of the company, and therefore how much is available to give away.
Yeah. And this is so important. I always, I always tell people, you really don't want to raise money haphazardly. You want to raise it in a way that's, that's thoughtful, and that you really are protecting both yourself and your investors. Because ultimately, when money gets involved, like people have their own businesses and they raise money, and then they think, they can kind of just keep going on. But it's like, you raise money, you kind of have a boss. You have to answer to the people you've raised money to. And so for the sake of those investors, as well as the business, you want to make sure to be thoughtful about this. And again, that is why I do think of Republic as part of the gold standard in this area, because you guys are tough on people. The good tough, the smart tough, which forces them to do kind of the work, the homework of just making sure they're doing something that makes sense. Because it's easy enough to sort of get cheap money out there that can ruin your business, and you don't want to do that.
Yeah, exactly. And that's something important, I think, to consider as well when you're thinking about fundraising is who do you want to have ownership in your company, and what does that ownership look like? Because there's the actual like math calculation, quantitative part of ownership, but there's also a participatory aspect to ownership. So a lot of times when you're raising capital from other people, particularly from venture capital, people are putting a lot of money into your business, so they want to have a say in how you're running things. And so they might take a seat on your board. They might have some other role in supporting you and your growth. With equity crowdfunding and at Republic, with the CrowdSafe, when you have retail investors, you might have 1,000 people investing in your business, and you don't have 1,000 board seats to give away. So when you use the CrowdSafe, those investors do not get information or voting rights, which means that they are able to get an equity stake in your business, but they're not necessarily entitled to a certain amount of information or input into how you do things. This is, it's kind of a give and take. So it's something that we did in order to make the ability to collapse all of your investors into one line on the cap table represented as one body. That was like a compromise that had to be made. But it is something that can be really valuable to companies because they can have a ton of input. They can get feedback from their campaign page. There's a discussion board on your campaign page. You should really go check it out and see how people interact and learn about a business and decide if they want to invest. And companies can interact with these investors however they want and, take advantage of their skill sets. Like Cheryl mentioned, if they filled out their social capital profile and, have something else to offer, companies can take advantage of that, but they also have the ability to be flexible in how they're managing those relationships because those investors do not have those rights.
Yeah. Yeah, and one of the more recent and successful campaigns that you guys ran right after the March change with Backstage Capital. So I was one of the investors in that, and I always use them as an example with folks now when they ask me about equity crowdfunding because I was on their list before. I was a fan of what they did before and all that, but the minute I became an investor, I started getting email and update after email, update after update, because they realized, they created this relationship that, I'm not going to be on their board. Like you said, I didn't invest that much. So, but they were responsive to me now. They recognized there was at some level, some kind of relationship that had been established. And respecting that relationship, even at, the relatively low dollar amounts that I put into their crowd campaign. I loved that. I appreciated that as somebody who jumped into there.
Yeah. And we ask all of our founders to do that, at least a couple times a year so that, investors do know what's going on and they don't just, send away their investment and then, see you later in a decade. But yes, it's a really awesome way to keep your community engaged and to maintain that following so that if you do another round later on in future years, or, if something great happens to your company, those people are there, they're supporters, they're rooting for you, they're talking about you. So the more that you can keep them engaged and up to date on what's going on, the better.
Yeah, no, that's great. That's great. And you guys do a good job with that. And they do a great job with that too. Very cool. Okay. Now we've talked around it a little bit, but let's say I'm ready to run my campaign. What is the most important thing? The first thing I need to do besides getting past you guys, you're tough. Cheryl and Heather, you're tough to get on the platform, but I'm on the platform now. To be successful, what would you say, what does a successful Republic campaign look like? What do I need to do?
Yeah, so this is something that people underestimate, right? Is preparation for a campaign. You can't just plop it up and expect all of it to be filled from the moment it hits. But that at the end of the day, we make sure that it's a partnership, right? So they come and they bring their community, and then we come and we bring in the million people that are on our platform, right? And so in order for them to do that, it's in order for them to engage a community, there could be different ways, right? There can be like a tiered contact list that they need to make in order for when it does happen to have a drip campaign that helps, engage them. This is also a relatively new product, right? Or, relatively new to, invest in a startup. So there also might need to be some education. So you might also need to have your customers, come to a town hall and for you to talk about it and pitch. You can also maybe utilize your social media if your brand in itself or your company has a good social media presence. There's many different ways to engage your community, and we ask all issuers to raise the first 25K through their community. Then once there's that momentum, then we open it up, because if we open it up at the very beginning when there's $0, that campaign is not really going to go anywhere, right? We want to make sure that there's some element that other people have invested, and so it's just quote unquote safer to invest, or that people just feel like they're with others on this bet. And so I think once again, it's all about preparation, what you do before the campaign, so that when you do launch the campaign, it's it's a mad dash to the finish, and that comes with this engagement. This also comes with our engagement of our investor base. So we send an email campaign when they launch and they reach 25K. We also make sure there's a closing soon announcement, and that at the end of the day, people that might be interested can go and look it out, check it out. So once again, it's two sides of engaging different types of community. But I think that's the key here, is really at the due diligence phase, recognizing if they do have a community that they can tap into. At the onboarding stage, making sure they're prepared and they create these contact lists and they have a strategy. And we give them a playbook, by the way, on the best tips and tricks that we've seen in the campaigns. And then on the actual, when the campaign is launched, which, by the way, typically takes 2 to 4 months. And it really is, then they also, because of the limit of if they're just going for 1 million versus if they're going for 5 million, right? It depends on that. But then it really becomes about executing.
Sorry to land on, I realize I don't think we landed on that. You don't have to raise the whole 5, right?
Oh yeah, no, you don't. Yeah. It is all just a matter of what your target is. So I mean, yeah, like it's also what's best for the founder, right? If they don't want to give too much, equity away, then they can just set the terms. Or if they only need it for a certain amount, I'm a big fan of founders just raising how much they need versus like what's out there, because just I'd rather founders keep a lot of their equity. But that being said, yeah, exactly. But also engage your community.
Gotcha. Okay, so I need a crowd. Already that's built in. 2 to 4 months on your platform. If I start or I'm going to do some work before I get onto your platform, and there might be some work afterwards. What's my time horizon? If I want to run one of these campaigns and be successful, what does it typically look like, do you think, kind of start to finish time-wise?
Yeah, so the overall timeline looks like this. So when you are interested in starting a campaign with Republic, our due diligence process is really quick. So if you send us your deck and we think, this is a good time to move forward with a conversation, we'll start with a business development call with our sales team so that you can understand exactly what it is you're getting into, how it works, all the mechanics of running a campaign. Then if it feels like a good fit, you're at the right stage, your community is ready to invest in you, we'll send you a due diligence questionnaire and ask you for some basic financials. Really simple. Assuming you can do all of that in short order, we can tell you within a week or two whether you've passed our investment committee, which meets every week. After that point, if you pass the investment committee, which means we're going to accept you onto the platform and offer you an opportunity to run a campaign, we send you a campaign agreement, which is a non-binding document stating your intent to raise and the terms. And then that kicks off onboarding. Onboarding takes anywhere from 4 to 6 weeks. It involves setting up your campaign page, getting your financials reviewed by a third-party CPA, and then filing your Form C with the SEC, which is that document that states your raise, the terms, all your financials, everything that the public needs to know in order to make an informed investment decision.
And you guys will handhold them through that. You'll handhold me through that with my coffee cup company.
Yeah, so we have a roster of partner attorneys and CPAs that we work with to get those steps completed for you in a timely manner. And then once that's all completed and your Form C is filed, you're ready to launch. And then the campaign itself can take, like I said, about 90 days, give or take, depending on how long you want to run it. And then after that, we hold the funds in escrow during the campaign. We take a commission off at the end, and then we close out the campaign, distribute your funds, and you're off to the races and continuing to build your business. So end to end, it can be about 4 to 6 months from this first call through closing your campaign.
So if I just were to call my own self and say, hey, I want to raise $5 million, it's not 30 days later, it's 4 to 6 months.
Correct.
Yeah. Okay, good. I like, you got to set those expectations for folks.
Yeah, for sure. And, like Cheryl said, when you run a campaign, it's not as simple as like set it and forget it. It's definitely something that you have to invest some time into. And so you really need to be clear about what your intentions are with doing such a campaign. You're not just going to show up and everyone's just going to start pouring money into your business because your idea is so brilliant. They're going to invest because they have some interest, relationship, reason to be supportive of your campaign. So because of the time and effort it takes, it's definitely important to understand, how this fits into your overall timeline of your work and, the other things that you have to be doing, like running the business itself while you're fundraising. You have to consider all those things before going into it.
That's great. And have you typically seen, or do you guys suggest maybe even like a marketing budget for folks? So when they start the campaign, they're gonna ride the ride. Do you suggest a budget, or do you typically see people save a certain amount of money to kind of, push out a campaign?
Yeah, we get this question a lot, and Cheryl, tack on it if I don't cover it. But generally speaking, we don't have any. There's no like perfect number in mind. Like, if you spend at least $10,000, you'll achieve your goals. Again, because it depends on what kind of business you are. Like, it depends if you have a social media following, or, if you're like a med tech device, then, your social media following might not be that instrumental in necessarily driving your investment. It could be, maybe, but maybe it won't. So it's important to understand where your investment is going to come from. We do recommend that companies come up with their marketing strategy in advance, that they have a plan for how they want to get the word out about their campaign and who they want to get it in front of. But there's not necessarily like a magic number or a certain budget that you need to allocate. I think we do generally find that companies that do spend a little bit of their own money on marketing are able to see some additional success, but it's not required, and it's not, it's not something that's super formulaic. Cheryl, do you agree?
100%. It really is, at the end of the day, tailoring to your strengths, understanding if this is something where you don't necessarily have much of a community, but you do want to maximize the value of the campaign, then we definitely suggest, allocating some money towards marketing. And quite frankly, it's the best type of marketing that you can have, right? It's the best marketing. It basically pays itself back because you just got invested in, right? And you also get all these brand ambassadors for life. So that's the type of thing where if you do have a marketing budget, to use that in for something like a campaign, which is also why, just to clarify, just because you don't make it now doesn't mean that you can't make it in the future. Sometimes we actually tell companies, come back to us in 3 to 6 months, because we actually think you'll be at a much better spot to capitalize on this campaign and all of this work, versus us just saying like, let's just take your money, like, like how,
right.
We do it in the best interest of the company, so that we don't set you up for failure. We rather want you to wait, spend time, creating your audience, getting all those potentially soft commitments, right? Some people use type forms. They're like, by the way, if I run this, like, would you be interesting, right?
Will you show up?
Right, exactly. It's like, exactly. And so, kind of creating that, and then so by the time they are ready for a campaign, then they can just, raise that money.
Yeah, that's really helpful. So having the bias towards crowd, not marketing budget number. If I'm summing that up right, because that makes sense to me. I like that.
Yeah, well, and it's understanding your audience too. Like if you have a crowd, and like knowing what is going to engage them. And so, it kind of goes back to Cheryl's earlier point about understanding your narrative and what's the story that you're going to tell about your business that's going to get people interested in investing in you and converting from being a customer to an investor. Or if you don't want your customers to be your investors, but you want, some other audience to do it, where are they and how are they going to be attracted to your campaign?
Yeah. Wow, you guys are champs. I really appreciate all this great information. What have I not asked you that you want to make sure to share with our group? And again, really appreciate your time. But what have I not asked you that you need to share with us that we would love to hear?
Our emails. No, I'm kidding. We'll share that in a little bit.
Direct phone numbers?
Yeah, no. Well, one thing we always get this is like, how much do we cost, right? Which I do want to cover because I think it's something where we're strictly success-based, which is awesome, right? So if you actually end up raising past your minimum amount, most minimums are like 25, 50K, we take 6% of the total fundraise in cash and then 2% of the equity offered. So say you raise 100K, we earn 6,000 in cash and 2,000 worth of the crowd safe that Heather mentioned. And so that to us keeps us aligned because we also have, portfolio services that we provide after a campaign. So once you're in the family, you're in the family, right? And so we want to support you. And because we also have 2% of that crowd safe, that means we're aligned and helping you get to the next level, get more funding, do all of that. And so that is something that's key that we also, provide similar to, I don't want to compare it directly to an accelerator, but like sometimes you are focused on, just what a VC can offer and that's it. But like an accelerator sometimes can like really go and accelerate you past the educational component of a campaign of a accelerator. So the point is that we are there for life and we want to support you. And, so the fees make sense. And we have had dozens now of companies who have come back and have raised again, which I think is just goes to show the incredible opportunity that you have here to continue to engage. I think that's what has led to the popularity of Republic, which is, community is key if you want to build this like a amazing company. And people really want ownership. Really, they don't want to be consumers anymore. They can buy all your cups, but like what's that going to do for them in long term? So.
By the way, I'm launching this company. This is happening. I will be.
Oh, really? Oh, okay.
We'll be ready when you are.
No,
yeah, so that's
the alignment is big. Yeah, and I appreciate you sharing that because there are lots of there's other platforms. I'll say there's not lots of platforms yet, but there's other platforms. But if you're going to raise, find people who will align with you and stick with you in the long haul. I find Republic to be that kind of a platform. I think I put the right address at the bottom, right? That's republic.co. I won't give your direct emails, but no.
I mean, you could. Sure. I mean, I'm sure. Heather,
okay.
Yeah. You can, if you want to reach out, feel free. Send us your pitch deck. Send us information that will give us, just the best information for a call, and then we can kind of move forward from there. So, we're open. We want to see as many companies. We see like 7,000 companies like a year. So it's a lot, but that's also why it's so important to give us as much information as possible so that we can make the best decision.
Mm-hmm. Yeah. So we're Heather at republic.co and Cheryl at republic.co. Very easy.
Awesome. Yeah. And that you guys have those one words like share and, Sade, you got the one name.
Yes, exactly.
Yeah. Before long, we're going to be a touring duo. It's just,
I mean,
on the road.
Love it. On tour.
That's great. Well, thank you guys. You guys have been very generous with your time. I really appreciate all the information for our folks. This is huge for us. Definitely going to see. I know we're seeing already tons of questions about it. I'm sure you're going to be seeing some traffic from that, and we're excited for this as an opportunity to keep democratizing access to capital. So important.
Awesome. Thanks for having us, Adam.
Yeah,
thank you.
All right.
Have a wonderful day.
Bye, y'all.
Okay.